It'd be difficult to discount Salesforce as a market leader. This, especially as the biggest beneficiaries and biggest drivers of AI will be companies exactly like Salesforce, ticker CRM, and others like perennial heavyweights, Microsoft, SAP, Oracle, etc. But in the earnings call and the Outlook webinar after earnings announcements, there was a lot of interesting commentary and data to digest. I'll focus on the commentary. I decided to prepare a video that showcases the webinar along with the real-time ticker view of the after hours chart of CRM. Of course, because this is not meant to be a high-tech video by nature, I simply used a screen recording of the company's call and the slightly delayed Google Finance chart to illustrate the point. The reason Salesforce was chosen for this analysis, which admittedly is not a deep dive, it's also not investment advice, and it should not be looked to for anything other than entertainment. The reason is because it's a perceived direct driver and direct beneficiary of widespread AI adoption. It's also a Wall Street darling, a strong performer in the market historically and year to date, and Salesforce's portfolio, divisions, and future growth potential seems really hard to match and may only be matched, potentially, by other powerhouses like the above-mentioned diversified tech companies. It's important to note that CRM as a stock play is more than just as a CRM and as a software play. Assets like Slack and Tableau push their original market offerings from a simple software and CRM play into a much more diversified tech play. Even more specifically, their investments in cybersecurity plays and other AI and tech adjacent market segments makes them certainly positioned as a growth story for at least a decade into the future, while looking like a decent play for cash flow when layered onto the backdrop of pure growth tech stocks. Simple looks at things like their investment in companies like Wise.io makes it hard to discount Salesforce as a market leader in innovation, at least from an investment and research perspective. This is important as you look at the practical day-to-day adoption of the growth strategy of companies big enough to move the markets, but also nimble enough to redefine what they are as a corporation in what I would term an ever-changing world. So here are some of the commentary that came to mind while I was listening in on the CRM's earning call on the backdrop of the actual earning call. So did the CEO lean a little too far into the AI concept? Was his commentary based on the jump in stock prices that we saw with the chip makers that leaned into AI commentary earlier in the month, namely NVIDIA and others? I felt very much like a name-dropping session and highly reliant on the prop-up effect of utilizing an AI-focused agenda. I actually feel like there was a correlation with the after-hours movement and the seemingly too focused commentary. Words like GPT, LLM, cloud, and AI were mentioned far too often for my taste. Not because I'm not excited about the potential from the AI perspective, but rather because I feel like it may have been a bit too convenient to just be able to answer everything with forward-thinking answers rather than rely on actual value produced by the AI backbone that the company's actually built upon. It seems slightly disingenuous to talk about transforming every part of the business, quote unquote. I'm paraphrasing, of course, as Mark alluded to, when there's still so much unrealized value and such an important core revenue foundation on their existing and well-regarded product. And they have a great product and services mix, period. The important part here is not that Salesforce is well entrenched in AI and stands to benefit from the market and benefit the market. They really do benefit as a company from AI. Instead, it does seem like they might have been pushing an agenda from a marketing perspective instead of from a practical perspective, which, of course, is one of the things that they can, by prerogative, do in their earnings call. But mentions of things like, to paraphrase, quote, CEOs all over the world are talking about to us about AI. Well, shouldn't CEOs you work with be asking about AI? Shouldn't they utilize your experience and knowledge of AI to make decisions? Shouldn't the locked-in folks who already entrust you to their data, entrust their data to you and their architecture to you, be in constant communication with you about AI? I guess maybe I'm missing something about the material value of such a statement. Questions asked from reporters and analysts, they were good. And it was particularly important for me to listen to the difference in vocal inflection from the question asker and the question answerer regarding the slowing of growth. The fundamentals of the stock, in all reality, have to be the core focal point. But there was seemingly a concerted effort to avoid talking in depth about the slowing growth and the potential for reduction in budgets by end users. Jokes about the pandemic, even being a problem, seemed to be a tactic more than anything to try and defray concerns about the changes in potential spend from the consumer perspective. It's obvious that the pandemic was an unpredictable situation, but to use it as a blanket answer as to why you wouldn't address the capex and the services budgets going forward doesn't really make sense. A 5% plus decline after hours, specifically as company spokespeople and figureheads dodged questions about future earnings growth, seemed to align directly with the disconnected nature of the way that the questions were being answered. It was almost too surface level for even an earnings call. At around 2:40 Pacific time, 5:40 Eastern, there was an even more pronounced drop as the discussion continued to migrate towards unproven and speculative growth channels and had a distinct lack of transparency and depth about the core fundamental company pillars. Again, that's not to say that there isn't value in being bullish on AI and on changing the overall capabilities of the company as it relates to current market environment and the AI inclusion. But as a major benefactor and a contributor to the AI concept from a market's perspective, with all their important customers and important value as a company that drives commerce and interfaces with large data sets of premium proprietary value, it sure seemed like Salesforce's commentary was lackluster at best. It's not fair, maybe, to pin a one-to-one correlation to the after-hours drop, as many factors like profit-taking, sentiment changes, market conditions, and other things factor as well. But it certainly seemed very correlated as the price changed. It seemed to be directly in line with the depth of the information shared by Salesforce. That is, as they dove deeper into the specifics, the stock price moved positively. As they skirted on the details, the stock price moved negatively. Mark seemed to be all about the perception of what was possible more than being aligned with the actual use cases and current capabilities of the company from an AI perspective, which seems insane to me, as this is one of the best pure plays in the AI channel, a company that already has value and can already benefit from a revenue perspective on the AI platforms. For a company with such a rich forward PE, it's not really lost on me that PE is not what it used to be, as far as evaluating tech stocks. It sure seems ridiculous, though, to be talking in such flowery language about what could be rather than what is happening under the hood in real time. It felt very crypto space to me as I listened. And the sentiment seemed to play out as the stock price, after hours, ticked lower. NVIDIA, as a contrast, delivered ridiculous outperformance as a result of direct correlation to the AI exposure it has. Of course, that's an apples to oranges comparison, as they're not competitive product-wise, and there are adoption cycles that differ between the company core offerings that don't correlate. But as a landscape for context, delivering low double-digit growth on the backdrop of rich multiples in PE versus other important AI market contributors, namely NVIDIA, it surely seems that Salesforce is later to the party from a revenue perspective. Some lag is acceptable, but that lag in earnings or revenue realization is maybe less palatable when you're talking about what's possible, but showing an entire quarter where there's little to no growth from implementation of actual AI. All that said, I'm exceptionally bullish on Salesforce for 1,000 reasons, but there's a lot of disappointment in my mind about what was laid out from a roadmap and vision perspective during the call. My bullishness on the stock is not derailed in any way from a broad perspective, but I do feel that the implementation of this earnings call was a bit hasty, it lacked a lot of transparency, and it felt very surface level. Again, I state, I believe Salesforce is already a leader in artificial intelligence. Why then are we hearing ridiculous non-core commentary about things that are not material to the actual earnings of the company for the prior quarter? If, and this is a big if, these quarterly earnings were positively impacted by AI work internally within Salesforce, then it's lackluster performance at best. I certainly hope they aren't playing that card. The growth rate was abysmal if that's the case, and may, in fact, help shape a less bullish view, personally, of the company in the long term. Slack is important. Tableau is important. It's important for more than just the largest enterprise customers. In fact, these tools are so important to the way we do business, especially on the small and medium business level, that it should be a major growth factor for Salesforce. It seemed to be an afterthought, with vague stylings of the future of AI from internal roadmap projections. Yes, Slack and Tableau were mentioned, and that's important, but there was a lot of flowery talk about what's going to be. It felt very trust us in delivery. And that's what's so scary in this earnings call, and why I believe the execution of this call was botched. It was not indicative of the value that Salesforce brings to the portfolio from a brain trust and as an existing customer database perspective. We don't rely on Salesforce to be prophets. We rely on them to deliver real time solutions to real world business problems. The call was short, but not sweet, in my opinion. And having made a larger investment in the company just minutes before the closing bell, it seemed annoying at best for the stock to be negatively impacted by such a poorly orchestrated earnings call. I say this as someone who normally champions this team as a leader in the ability to talk about reality in the space they operate in. And I'm someone who is bullish on the company as a whole, especially on the backdrop of the AI growth story. In fact, I hope that the stock rebounds significantly as the figureheads have finally closed out the call. People can realize that even though the statements made seem wholly disconnected from the reality the company's built as a maverick and as an exceptional solutions provider over the past several years. The overall sentiment from me is that while I'm still bullish on the stock, the earnings call was a lot of fluff. It was not a ton of iterative and actionable data, and it downplayed the core strengths of the company when it could have been very much more effective by showing how well Salesforce has actually integrated AI into their market offerings and is heavily investing their money into AI centric and AI adjacent plays going forward. A lot of money was left on the table, in my opinion, during the call that maybe didn't need to be. From the perspective of being overpriced relative to the real time multiples that CRM trades at, it seems that Salesforce management missed a prime opportunity to properly inflate market capitalization in favor of instead hitting talking points from marketing staff. I hope that these trust us statements have a bit more oomph behind them and that we see some of the real positive impacts that are very likely to exist in the short-term future for Salesforce. But I grade this earning call a poor showing. It offered very little insights into the future impact AI will have on actual revenue and actual earnings. I also want to point out that this commentary by me is meant to serve as a stream of consciousness opinion, not a deep dive on the value of the stock, nor as an indicator of my position on the stock or of the capabilities of the team or the future value of the company. I guess I just wanted a little less ohana and a little more practicality in my earnings call.